Whoa.
Sorry.
I'm associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure is unchanged. My position sizing has changed, but the disclosure has not changed. And bam. Okay, so it was a rest day today, which I would view as bearish. SPYs finished down 0.2%, Qs finished down 0.5%, and the IWM finished down 0.25%. So we were negative across the board. Biggest weakness was in tech today. Have the SPY 5-minute up right now. Yeah, a little exciting off the open. I thought maybe we could have something to bite onto these first 10 minutes. And I don't even know what it was. I can't even put my finger on it. You know, we had some great longs, like literally right off the open / pre-market. And when we hit this high here, at like 395, in usual markets, here's where I want to start being greedy. And I told everyone, I was like, I don't trust this market. I feel like you should probably sell some of your longs. And that's kind of what I was doing here. There's a couple names I didn't quite get filled on, and some that I was able to really kind of size down on right into this spot, especially off some stuff that I was buying pre-market. At one point, you know, we were almost at 390 pre-market in the SPYs. It led to a pretty good buying opportunity if you're able to get stock off that spot. And I really don't know. I'm trying to figure out what it was. The IWM is leading. That usually gets me really excited. The dollar was down. Qs here were also giving a nice little spike in the beginning of the day, led by the IWM. I really can't put my finger on why I lost my confidence in the market all of a sudden. It must have been something that I was seeing somewhere, and I genuinely can't remember what it was. I was trying to be cautiously optimistic at that point to see if we get continuation, and I was looking for a degree of upside continuation this morning, especially off those more pre-market lows. So let's take a recap of the daily chart, and then we can take another quick look at the 5-minute. We ended up having an inside day here for the SPYs, which again I would view as bearish. It was a day 3 down. And at one point this morning we were gapping below yesterday's low. And you know, yesterday we closed right at that 393.50, which is really important. The Qs closed like right above 280, but they were gapping below 280, which is a really important spot. IWM was broken coming into today. So what I was looking at pre-market was the SPYs giving me a common gap down into support on a day 3. That's a buy. Qs also a day 3, but a potential breakaway gap because they're gapping below a major support level. So the SPYs to me off 290 on the first test of it today on day 3 is a clear buy to me, and then we'll see what happens. The Qs, again, it's a day 3, so it can be a little bit better for a bounce, but gapping below support is a potential breakaway gap, so that wasn't very good. So my initial thought process here was be long versus SPY 390 / be long back through QQ 280. And again, especially if you start a little early pre-market, that opening part of that trade pre-market into this opening move is fantastic. For some reason into this, 395, even though we recaptured SPY 393.50, which is super important. I just felt like it was a time we needed to book some profit. There was something there that just wasn't confirming to me, and I honestly can't figure out what it was because my normal confirming factors, like the IWM and the dollar, they were there. And then this market just totally failed. You know, the IWM tried to hold up best inside 5 here in the third bar of the day. Qs pulling back too much. SPYs pulling back too much. But then once things broke this opening low, SPY broke their opening low, Q broke their opening low, and they're relatively weak, and then eventually this IWM failed also. It's kind of a wrap. This hammer here at 10 a.m., and I had to hop off our team radio a little early today than usual. I had to hop off at 10. But this hammer here at 10 a.m., even though there's no extension on it, had this volume confirmation and kind of got down into yesterday's low area. I do think that was an opportunity to be able to buy. And I think I even called out a buy when the second tail came in. So again, I don't like the lack of extension, but I like this kind of double tail scenario. This second low on this volume at 10.10 is when Putin came out and he said basically something about nukes, that they could still be, kind of potentially on the table. And the market just bought that right back up. So I'm looking at this market and I'm like, all right, we just got this really nice hammer here off those lows. We didn't get any follow through when we were weak. And this nuke headline comes out. We downtick really hard on volume, but snap right back up. The market has shown me that it's really resilient into this area. Let's look for some longs. And then it was the same situation. We got really good follow through. Let's look at something besides the IWM. Same thing here. Your double tails, not as good a follow through in this buys as we got in the IWM. Qs here, those double tails, a little bit of follow through as well. But we just couldn't really You hit this point where we got to 395 at 11, where the market really should go. It should go. And it just couldn't. It was like the buyers felt like they were still kind of totally on strike. The buyers were just on strike. They're just not there. So it seemed to me like sellers were not there today either, because there's been so much selling over the course of the last couple of days. This was the day that buyers needed to come back into the market. They needed to defend 390. They needed to recapture 390, 350. They needed to retrace a good percentage of yesterday's move. Honestly, get back to 397 to be able to prove themselves, because the sellers, I really don't think were there. There was just no one. There was no one buying the market. There were no buyers there. There was just no follow through. And then once again, we kind of failed. And once this next failure happened, meaning we had our opening drive, opening failure, then we had those double tails that got called out with that headline. I really liked how we bought up that headline, especially that we didn't break those lows, and you had those kind of double tails that came in like I described. This was the second failure. Once the second failure came in, to me the market was just shot for the day. We clearly weren't getting the same downside follow through. The sellers are a little bit exhausted after the heavy selling of the last couple of days, and it just made a lot of sense for the market to have a correction day today, to the upside or through time. We couldn't get the upside correction at all. Bulls didn't even show themselves. Instead, we went sideways all day, and that's just going to be more bearish. So at the end of the day today, we have an inside day here for the SPYs. We have an inside day for the IWM. We do not have an inside day for the Qs. The Qs basically still closed right at that 280, which is an important level. SPYs closed below 390, 350, which is an important level, but above 390. And honestly, this IWM looks terrible. IWM below 180, really key level there, 180.50 actually. Closed below it yesterday, closed below it again today. Gave a rest day. Let's see these moving averages catch up, begin to cross. And the Russell's been a leader this entire calendar year, and it just doesn't look good. Maybe we're just kind of going into wait and see mode for PPI, CPI, and Fed that are all upcoming, later this week and next week. But if you had to pick a side of the market to be on, cash is honestly probably the right side of the market to be on in the moment until we get more clarity. Just talking big picture here, of course. You can always find your smaller, time frame trades for cash flow for yourself, or honestly, being short over being long is probably better right now. Or just being, kind of more market neutral, or market neutral leaning short. It would probably be the way to be, which I'm not. I'm long. But that's probably the right way to be right now with what the market technicals are telling us at this point. And that's it. We saw a continuation of the fear trade today. Day 3 to the downside with that gap down, but the dollar, failing off, 28.50 and being, negative on the day, pretty much all day today, even though, got a little bit off of its lows. This UUP was still red today, still below 28.50. But the market couldn't catch a bid, and the bonds, this TLT continued to rip, which, we've discussed the market environment, guys, and this is really important for everyone to understand. I think the market environment here has changed over the course of the last week, really, maybe 2 weeks. The market environment has changed. At a different part in the market environment over the course of the calendar year of 2022, TLT going up, interest rates going down, the market would be performing well, long duration stocks would be performing well, growth stocks would be squeezing up a little bit, FANG names would be trading well. That's what we'd be seeing, and that is just not at all what we're seeing. We're seeing the opposite. We're seeing what feels like, real recession type trade kind of coming in at this point, which we discussed a little bit in yesterday's afternoon meeting. This TLT move today was monstrous. I mentioned, I think, just a few days ago, like, this TLT could work its way up to 110. It seems reasonable for me to retrace up to 110. I just don't want it to happen in a straight line. I think I literally said that, like, in an afternoon meeting this week. And, well, guess what? Like, 2 days later, we're just about a TLT 110, and it's doing it in a straight line. It's just not what you want to see. It's the recession trade. It's a flight to safety. People are buying bonds. They don't want anything to do with risk assets, and the riskier the asset, the less they're interested in it. Utilities, I guess, were red today, but they kind of continue to hold up broadly. Healthcare, XLV, super, super strong. Oil getting smoked. Energy getting destroyed. I guess nat gas bounced back a little bit, but this is oil getting smoked like this. I mean, again, it's a recession trade. The price of this USO ETF, the price of crude right now, basically in general, is at the same levels that it was at, in January, February of this year. Done a full turnaround on that move. What did XLE end up doing today? XLE had a little bit of a rest day after getting smoked for 2 days in a row, coming into the downside. So, yeah, so that's where we're at. My game plan this morning when we were closer to 390 was to look for that counter trend bounce trade today, was to be buying off of, some key FANG stock levels in Microsoft and Apple and Google and Amazon, and those trades actually paid me really well as long as you weren't too greedy with them, trying to fight them into the afternoon. The opening tape on that and the pre-market tape, really paid you on those trades. But there was no follow-through on it. And you guys know I love to be able to have that good stock and have it close well and then be greedy and look for that bigger move. Got the stock at the right prices, got the initial balance, was able to cover risk, was able to sell some to book in some profit, but we closed terribly today. So there's no real reason to think that you can go home, with any of those positions if you enter them today at this spot. So that's it. I guess that's pretty much all I got for you guys on today's afternoon meeting. And I am happy to answer any questions that you guys may have. So let me scroll up here in the VTF and start from the start. Ben Con saying it feels like 9/6, like September 6th, I'm assuming is what you mean on that. This day in here, 9/6. So you think we're going to get a nice little rally off this? Maybe. I don't know. I don't know. I was on vacation in the month of September.
That's after Powell came out and said what he said. Now we're still waiting.
Yeah, this was after a really big. I mean, this was that day here was after we had just sold from 432 down to 390. We had just dropped $40, and we were extended to the downside, and we got this oversold bounce. We've been trending up for 2 months, and now we're breaking this uptrend for the very first time. A lot of this, I think, is still going to depend on what the numbers look like at the end of this week and the beginning of next week, on how this market resolves itself. Which I hate that. I hate just waiting for this, binary news event catalyst. But it's the environment that we're in. Scrolling through here from Toussaint. Did we put in a legitimate doji on the daily today? If so, could this be a bottom for the week? So this is a doji candle, but there's different types of dojis. So a doji is not a reversal candle necessarily. In certain situations, it can be a retracement candle. In other situations, a doji can be a continuation candle. And this is just kind of a bearish consolidation. And we closed at the midpoint, so you got a little bit of an upside tail, a little bit of a downside tail. The volume today is very, very light. So dojis do not necessarily mean that you're going to pivot back up. So I like inside days. To me, it's more significant that today is an inside day than it is what the shape of the candle looks like. Because inside days give us clarity for going forward. Tomorrow's game plan is going to be very simple. I mean, maybe not, depends how we gap. But if we don't have a big gap, and we open up tomorrow morning within today's range, the game plan is very simple. You want to be long above today's high, and you want to be short below today's low. And when we're in between, look at what's relatively strong and relatively weak. Could try to be long some relative strength or short some relative weakness while we're in between. But the inside day gives a very clear setup. Though broadly, this inside days are continuation patterns, right? Or not patterns, but they're giving you rest to set up for continuation. And for me, I would say that's a higher probability of this rest leading to continuation to the downside from the selling from the last 2 days than the opposite. But confirmation would come tomorrow on an inside and down or an inside and up on the opposite. So, yeah, that's going to be tomorrow morning's game plan. From Sue. Hi, Sue. Could you please explain how you enter a trade at the open through a predefined price level? For example, when you say you can try to buy stock XYZ through 8, do you enter that trade via buy stop? What stop loss do you use in order to share size properly? The low of the entry candle, the previous day's high. Sure. So great question. So there's a lot of different types of trades that you can take in the market, and the type of trade that you're in is going to dictate what the appropriate stop loss is. So for example, if you're buying a breakout, we use the ignition candle low on a 5 or 15 minute chart, which is the candle in which the breakout occurs. So that is, sorry, I got distracted. So that is in that case. In another type of continuation trade, buying through $8, maybe you want to use a pivot low from that day. Sometimes if that trade is happening off the open or a little bit of a bigger picture, then you're using like the previous day's high or a pre-market low or something like that. So it really depends on the trade that you're taking and when you're taking it and the time frame that you're looking at. When we're doing our research pre-market, we don't know what the intraday looks like for that day because the market hasn't opened. So when I'm doing my research pre-market or I'm coming up with a game plan pre-market, it's always going to be daily levels. But the idea on what I want to look for the most part is, I don't know, I'm just trying to look at some of my game plan names today, like Apache 43 level is support type of deal. It doesn't necessarily mean you're buying versus 43. Or, Mobileye, like long versus 30 was on here, or MDRX, which I don't think ever triggered, long through $19. Pre-market, all I know is the right stop loss based on a daily chart. But a lot of what I want to do is I want to take these daily levels that we identify, and then I want to try to find 5-minute or 15-minute stop losses. And then that goes back to one of my key principles for trading, which is that you want to try to find spots where you can get daily chart reward for smaller time frame risk. So I'm buying, and again, this MDRX is not a great example because it never even triggered today, but you can see, there's a level here at $19, whatever. So I'm looking to buy MDRX through 19 because of the daily chart reward profile. This is a bullish consolidation. If this MDRX breaks 19, this thing has the potential to move into the low 20s. But I want to try to ideally find a stop loss that's going to be on a 5-minute chart where maybe I've got, 5 cents risk or 20 cents risk or 25 cents risk, as opposed to if you really wanted to trade this right on the daily chart, which I would not recommend, you'd be buying, the break of the bull flag at 19 and your stop loss would be down at 1760. I would never do that. I don't want to say I would never do that. I might do it on like a very, very small position, but it's really not what I'm looking to do. That's not what's going to give me that overwhelmingly large risk reward that I want. So yeah, I hope that helps. It's always that conundrum of this is the information that we have before the meeting even begins on the levels that I think are important for the market or the stocks I want to pay attention to for breakouts or whatever it is. And that this would be the right stop loss on a daily chart. But again, ideally, I want to try to find a smaller time frame stop. And what that smaller time frame stop is going to depend on the type of trade that I'm actually getting in. And some examples are an ignition bar low, a previous pivot low from a 5 or a 15-minute chart, the low of the day, the pre-market low, the previous day's high. Those are all examples of potential stop losses that I may use depending on the type of trade that I'm getting in. Which I know that's a very broad answer, Sue, and it may not overly help you. So the other thing that I would say is, if you're unsure, if you're getting into a trade on the break of a level and you're unsure, what the appropriate stop loss would be, just ask the opinion of myself or of other people here in the VTF, just by, hey guys, I'm looking at buying XYZ stock through $50. If my trade triggers here, what do you think the appropriate stop loss is? And you can ask that in real time as it's approaching the level or whatever. And then, I will always answer that question as best as I can. And if for whatever reason I've stepped away from the desk, which happens, our other great teammates, I'm sure, will be giving you their opinion as well, Pat or Josh or anybody, really. And that everything should always be a discussion, right? I like when people have different opinions. I like when people disagree with my method or want to challenge what I do or things like that, because it's only going to make us all stronger, better traders. And I'm not necessarily a believer that my way is like the way. So when we put our collective heads together, it makes all of us better traders. Cool. Next here, I think, is from PS. Is your style of trading primarily momentum, or do you have mean reversion trades as well? If you have both, how do you decide which strategies to trade? Yeah, so I have a lot of different strategies that I'm implementing into the market, a lot of different things that I'm doing. I do primarily prefer to trade with trend and with momentum, because I find that the reward profile for those types of trades is much bigger than counter trend, mean reversion type of trades. But I absolutely take both. Absolutely take both types of trades. And then within those categories of like with trend or counter trend trades, you've got a lot of different types of trades that are with trend trades or counter trend trades that I'm involved in and that I look at and that I trade. So hope that helps. From Dave, you mentioned that we had an inside day on the SPY today. Are we looking for lows and highs from today as a signal, or lows and highs from yesterday as a signal? Lows and highs from today, tomorrow. The inside day high and low of today is what we're really going to be focused on tomorrow. From Ramoon, Apple. Yeah, Apple might have been my signal. Was that my signal? Apple was my signal. I think Apple was amongst my signals, I should say. This Apple turned down so hard and so fast, kind of before the SPYs and Qs still went. I think that was one of the things I was looking at, where I was just like, guys, I decided I don't trust this market. We're like still weak here. We sold very heavy the last couple of days. We got this little bit of a bounce back. There's a really fast move from 390 to, almost 390 pre-market to 395 by the second 5-minute bar of the day. This is a spot to book profit, and I think that Apple was part of my thought process. The weakness here on how they sold that in that kind of sell call out. So I appreciate you reminding me that. And now let me read the rest of your question. It struggled to move above 140.15 for a few minutes before it bounced. Are you talking about the end of the day here? Yeah, I was watching Apple actually very closely at that time. As I was explaining to Josh an old school trade that I used to do off of like a 140 level like that had size, that I neither do nor teach anymore because it doesn't work, and actually worked perfect here. And I was like, this is so weird. This reminds me of old school trading. Like, you don't really see stocks rack like this anymore around these levels. But yeah, 100%. I was watching that thing super closely, and it was really struggling to break above like 140.15 to 140.20 for a bit. And then it finally cleared above it and gave a bigger bounce through that 140. Do I rely on the tape here, or just because it's technically significant level, or both? It's a technically significant level is the answer I want to give on that. Because it's funny you would ask that question on this specific circumstance, because I was actually reading the heck out of the tape in Apple at 140 today, but it was specifically just to show Josh a type of trade that doesn't really work or exist anymore, but was working here and existing. And it was that old school trade was kind of based on the tape. So I was reading the hell out of the tape actually around Apple 140 today, but the trade's off the daily level. 140. I had 140 on my list today as a level for Apple to pay attention to. It got down to it. It held to the penny and gave a dollar bounce off of it into the close. From Sebastian. Hey Derrick, has intraday trading been harder than usual for you and the team? The amount of news and volatility these past days is getting me stopped out of everything. I have felt that the last few weeks have been broadly difficult. Not necessarily overall on the year, but honestly, it's like November 14th or November 11th. I thought that most, not all, most of the price action on most of these days has been pretty difficult. I remember this was an easier day on the 17th. This was an easier day on the 22nd. This was the best and easiest day on the 30th. But a lot of the other price action in here I have found to be a little bit difficult over the course of the last few weeks, which just kind of is what it is. I think I don't know, especially as we're coming out of earnings season now, and this market is it's so macro focused. And like I've been talking about in every meeting recently, we're seeing it. You're seeing the tape change in front of you as far as the story of this market as it moves from the interest rate, Fed, inflation conversation to the recession conversation, which is not to say that the inflation conversation goes away entirely. Of course, it's going to be with us for a while still. But even though there's been chatter about a recession for a lot of this year, we haven't seen the recession trade come in, and we're really seeing that part of the trade, I feel like, begin to come in this last week, 2 weeks at this point. So yeah, the tape is changing here a little bit. We need to learn to adjust with it. I don't know. I want to just be able to fast forward to Friday already, and so we can get some of these numbers in and see what we do from there. From PS, when you say the trend, do you mean primarily long? There have been a lot of downtrending stocks, which I generally don't hear you talk about. So feel free to always ask me about any name that's downtrending if you want a look at it. But no, I'm talking about the trends on multiple time frames always. So we've spent a lot of time recently talking about the short time frame uptrend bouncing into the big time frame downtrend and which is going to win. And I've been saying in almost every afternoon meeting, almost every morning meeting, that most likely the big time frame downtrend is going to beat out the small time frame uptrend. And there's a bunch. I'm pretty sure that every level that I mentioned in the morning meeting today, I mentioned that as a level for both sides of the market, as short and long. With the thought process, this is literally what I said in the morning meeting today was all of these levels are levels for shorts and longs, long above, short below. But for today, because it's a day 3 down into SPY 390, I prefer to the long side. However, if we just rest for 1 or 2 days tightly in front of those levels, those become shorts. Like this DocuSign as an example. First day down into 40, I prefer it long than short while we have extension. But this stock is downtrending. $40 is your next support level where you can get continuation. If we then rest for a couple days in Docu in front of 40 and it breaks the level, then that's a potential short through 40. First test on it, I prefer to be long than short with that extension into it. But if we rest like we did today for today and maybe another session or so, those moving averages are going to catch up. Those become shorts. So especially now that the smaller time frame from the market has gone from bullish, where it's been for the last almost 2 months, to neutral, that begins to make this a much more two-way tape of longs and shorts, where you can be looking to be involved in the long side on relative strength and on the short side on relative weakness. If we're talking about me personally, I'm a better trader to the long side than I am to the short side. I'm still working and improving as a trader over time. I've still got some really good stock from October lows and a lot of names that I'm not getting out of here, and I'm going to continue to kind of manage those positions and potentially build into them, because at the end of the day, even if the market moves back to S&P 3000 like Bank of America says is going to be happening in the first half of 2022, as a recession, worst case scenario, bear market environment, the trend for the last 100 years is still to the upside, which I know sounds crazy to talk about in a room of short time frame traders. But I just am more confident on that side of the market. And I've said it over and over and over again. I'll say it again, because especially if it's beneficial for everybody. The worst losses I've ever taken in my career are to the short side. I'm much less aggressive to the short side, and that's from having my hand just get burned. Losing big dollar amounts on stocks, even where I knew I was right, and I ended up being right. It was just the pain in the short run when you don't know where the stock can go to on a squeeze or whatever, when the upside of a short squeeze is infinite as opposed to the downside of a bear run, which is to zero. Even like that Carvana got mentioned today, at this point everybody's short this thing. You could just buy it here. It's almost an option contract to own equity versus zero. Though I do think that this could be a zero because it's this company's numbers are atrocious. So hope that helps. From Zachary, looking at laptops that I can trade on, I know it has to be Windows and AMD cards aren't good with Lightspeed. Any recommendations, brands, RAM size? My desktop says even when I have YouTube, VTF, Lightspeed, email, etc. open, I'm never using more than 10 RAM. So I am really bad at computers. I don't even know what RAM is. So you're asking the wrong person. I would ask Pat or Josh, or I'm pretty sure that the Lightspeed website has like hardware recommendations. So I know it doesn't help, but I hope it helps. from Andrew, shop. Yeah, I'm in shop. I was in shop yesterday. Had a good trade in it yesterday. Was in it again today, pretty much all day. Just couldn't get that upside break on this thing, man. That couldn't really clear through that 39 area, which was disappointing to me. But I was long shop at 1050. That's when you bought at 1050. I hope you're already long and you weren't just buying in the 1050 bar. Risk off as it was hitting strong resistance from yesterday at 38.65. Okay, yeah, some resistance, some price congestion in that area from yesterday. I held for a longer trade, but with stop of profits. I love that. I held for the longer trade, but I would stop with profits. If the market could have given us any sort of bounce today instead of that time correction, Shopify looked great it looked great on the opening drive, and it looked great again here into that $39 area to potentially give us some real continuation. So that's the right thing to do. Should I have taken full profit yesterday's resistance? I don't think so. And then if the opportunity presented, re-entered. I don't like playing that game of fully liquidating the position to be able to re-enter. You end up missing it too often. I like playing the game of, let me take off 1/10 of my position because I think I can rebuy it lower, and if I fail to be able to rebuy it lower, I still have 9/10 of my position to be able to pay me on it. I like that thought process. But I'm going to get full out and be able to come back in. I just don't think you're good enough, Andrew. No offense to you, because I don't think I'm good enough. I don't think anybody's good enough to be able to sell every peak at every resistance and perfectly buy every single low, and then be able to get the continuation and fully keep the difference in between. Again, I like playing that for cash flow on a percentage of position, but not fully out and fully in. It's too hard. In the past, you've talked about generating cash flow. Can you talk about how to handle a trade with modest profits as you move into resistance support on a day when you don't have a clear trend line today? Yeah, so it's exactly like I was just talking about, where I want to maintain the position, but I want to be able to book a little bit because it's a resistance area, or for me, less about resistance and more about extension. It's extended. I want to liquidate some because I think that based on this extension, I could rebuy it at the ADMA or whatever and be able to kind of keep the difference on 1/10 of my position or whatever it is. And if I don't get the rebuy, then fine, it can go without me. If I get the rebuy, I can keep that cash flow and potentially do it back and forth and back and forth and back and forth. There's a few ways in which you can do it. You can do it a little bit technically, which is kind of what I'm just describing. You see the extension, you book a little bit, ADMA catches up, or technical correction to the ADMA, you rebuy it, and then you can choose to sell it again at the same price, and then work a range, or you can choose to then hold it for like a next level of extension and kind of rinse and repeat, or you can do it a little bit more systematically where it's, you know, I am going to be taking off a tenth of my position at 39 to rebuy it at 38.75, and it's not based necessarily on technicals. It's just kind of more systematic based on the math, where you are judging. What you're doing with that is you're kind of judging the probability of the fills that you can get off of that, in this case 25 cents, versus the probability of continuation without you. So option number one, let's say you don't, let's just say you had 1,000 shares, all right, and you're deciding to take 100 shares and sell it at 39 to buy it back at 38.75, kind of systematically, and see how many times you can do that. Every time you do that, you lock in $25. Or you don't do that, right? So let's say that you sell at 39 thinking you could rebuy it at 38.75. You want to keep the $25 difference, and it just rips to $40. Well, that you just missed out on making $100, right? Let's say that the stock goes sideways for the rest of the day and bounces back and forth between 39 and 38.75 4 times, and you sell 39 and buy 38.75 4 times. You just made that same $100 by doing it that way. Let's say it does it that 4 times and then continues, right? So now you got 900 shares as it gets to 40 instead of the 1,000 shares. Your P&L would be the same. It went sideways 4 times. You did it. It goes up to 40. You're up the same P&L as if you never sold any, and it went to 40, right? But then there's a situation where you do it between 39 and 38.75 4 times. You put that $100 in your pocket, and the trade rolls over and fails. In that case, you made more than you made more than you would have if you were just not selling any at 39 and you're looking for 40. So what you're doing is you're kind of playing with the math on the money that you can put in your pocket for cash flow versus the probability of having less stock for that bigger move. And that's why I like to do it on smaller amounts of larger positions, where maybe instead of having 1,000, which that's still a decent number, honestly, selling 100 shares out of 1,000 shares of your Shopify, but maybe you have 10,000 shares of Shopify, and you're going to do it that same 100 shares. If you're wrong and you can't work the range and it goes straight to 40, having that 9,900 shares versus 10,000 shares, it kind of becomes inconsequential. So that's why I'm saying I like the idea of doing it with a small piece of your stock, and the larger the core position that you have, the better it is to be able to kind of do that. And then you can go ahead and play around with the numbers on a spreadsheet and different ideas of probability and where the marketplace is to try to decide kind of what the best situation is. Carvana is an embarrassment to financial analysts. They should all be fired. Yeah, that and just about every other growth stock that they were upgrading at $300 and now they downgraded at $5. The sell side analysts are just like it's don't even get me started. You know my rants. The biggest jokers on all of Wall Street, in my opinion, are sell-side analysts. Yet I still look at what they do every morning because it puts stocks in play in such a way that I want to trade them because they'll have higher ranges and higher volume and higher volatility and everything like that.
There are some analysts that are worth paying attention, but they're few and far between.
Josh is defending the analyst.
I said there's some, like very few.
From Rex, could you talk a little bit about confirmation or a signal to trade or signal to enter the trade? I was looking for NVIDIA for long at 950. Okay. And 1030 on the 5-minute. Market broke the open low, but NVIDIA did not. At 1040 the Qs, and NVIDIA pivoted back up and day high, but I used 1045 minute candle as my stop. It would have stopped me out. Sorry. Yeah, so the question here is about confirmation or signal to enter a trade. For me, those are two totally different things. A signal to enter the trade is a trade setup. A trade setup is a breakout. A trade setup is an inside bar continuation play. A trade setup is a hammer capitulation retracement trade. A trade setup is a hammer continuation trade. A trade setup is an inside bar trend continuation trade. Those are all trade setups. Those are all signals to enter a trade. Confirmation is confirmation factors. What confirmation is not, and this is a mistake that a lot of new traders make, is they want to buy the breakout at $50. It goes to $50. They don't buy the stock. It breaks out through 50. It's at $50.40, and they go, "Oh, the trade's working. Let me get in." That's terrible. What we say is that you want to anticipate that the trade will work, not react to the fact that the trade has already worked. Anticipate, don't react. Confirmation for me is confirming factors. Confirming factors are layers of probability. So is the market on my side? So first of all, you have to have the trade. The trade could be any of the things that I just mentioned, plus there's a whole lot of other types of trades that are out there. So signal to enter is the trade. Confirmation is the market on my side? Is there relative strength? What time of the day is it? And the market was really not on our side. Maybe a little bit actually at that. You know what? I'll even let you say the market's on your side here because we were still trying to be long off of those two tails that I spoke about, and that was before this breakdown at 11 o'clock. So we could even say the market's on our side. Is NVIDIA relatively strong? It's kind of hard to say at that time of the day, at that 10:40 time of the day. I feel it's like the answer is like yes and no at the same time. Like on the one hand, it's relatively strong versus the opening low compared to the market, but it's relatively weak compared to like this 10 a.m. low and this 10 a.m. low, where the 10 a.m. low is not holding and the 10 a.m. low is not holding. So at the beginning of the day it was relatively strong, but by the time you're looking to enter the stock, I would argue it's relatively weak because the market's holding that 10 a.m. pivot and your stock is not holding that 10 a.m. pivot. And this is actually really tricky. This is one of the things, going back to I think it was Sebastian's question, that I have felt has made the last like month or so since the last CPI number really tricky. Is we've seen this constant flipping of relative strength and relative weakness on an intraday basis that to me has been really frustrating because it's been such an important layer of probability to recognize relative strength and relative weakness, but there's been no consistency to it. NVIDIA was strong as heck off the open, and now at this time of the day, I would argue it's actually acting relatively weak to the market, and that would be kind of against the trade. And then the trade itself obviously will have trade the dynamics of a trade or the signal to be able to enter and where the stop loss is. So you need to actually be able to have that. And this attempted pivot here is maybe it, but this is at this point is a counter trend trade, a range trade. It's certainly not a with trend trade when you get involved in it, but you got no extension. So I don't like that trade. I don't like that trade. I'm seeing relative weakness here. Fine, the market's on your side, but you got no extension. You're trying to go counter trend on a range-based trade or just generally counter trend on this. I just don't like the trade. I think it's very difficult. So I lost my spot because there's been a lot of typing. I hope that helps with you there, Rex. Josh, is that a question that you typed out?
Yes, it is.
Okay. Given what we did on the Powell speech the other day and the fact that we already erased that move, let's just take a look again at the daily chart, even though I already know what it looks like. So yeah, we fully erased the Powell move. do you think the market down here is already pricing in the CPI number, and we are now moving into worry about recession territory? So yes and no at the same time, or do you think it is still a place where it will react big one way or the other on CPI? Hot, we go much lower, and cool, we go much higher. So I love the question. So I think that the narrative is adjusting. I don't think that we all of a sudden on December 1st went from a narrative that is 100% about recession and 0% about inflation. I think that we're going to start to see. So I've been thinking a lot about that ISM number from earlier in the week that helped to sink this market because it came in super hot, and that is a reflection of potential inflation that is still persistent and stronger than we might want it to be otherwise. And I've been thinking about that in conjunction with the job number that we had on Friday last week. The job number came in hot and the market bloated up. The ISM number came in super hot and the market sold it off. And I think as we go into this narrative adjustment, it's not like the story is 100% flipping overnight and we don't care about inflation anymore. We absolutely do. But I think that numbers indicating or not indicating a recession also start to matter a little bit more. So like that ISM number, I bet you that if it came in flat or slightly hotter than estimates, that we probably would have traded well on it. Because it'd be like, okay, like the number came in flat, it's not the end of the world, like inflation's blowing up in our face, but at the same time, it's good because good news can maybe become good news again because we're seeing progress on inflation, and this is indicating that where's the recession in ISM number like that? That'd be if it came in flat or just a little bit hot. Coming in super hot like it did, the inflation narrative overrides it again. It's like, oh my god, this is so bad. Maybe we didn't get rid of inflation, and they kind of sell it off. So, it's pretty nuanced because, like I'm saying, it's not like we're just gonna flip the script suddenly tomorrow, and good news is good news and bad news is bad news. It's not gonna be that way. But we saw that jobs number come in. That jobs number was good. People were working, and I think people were still remembering what Powell just said and what the CPI number was, and they ended up buying it back up because they were like, well, inflation's coming down, the Fed is pausing, but where's the recession if people are still working kind of deal? And they bought us back up. And then that ISM number was just so ruthlessly hot that it was like, oh, like inflation is still here. So like I'm saying, I think that, and I've been saying this, we're still going to see some hot inflation numbers come in over the course of 2023 compared to expectations. It's not like all of a sudden, just because we had that one number hit last month, that every single month now we're going to get lower and lower numbers and the market's going to begin to price it in. So now to try to directly answer your question on how big we move on the CPI, we're still going to move on the CPI. There is a chance that those moves start to become a little bit more muted. I mean, the moves that we had the last two CPI numbers were nothing short of absolutely insane. This candle here, we were even lower than that pre-market. That's our lows of the year. We were almost 345 pre-market that day, and we closed at 367 or something. It's just a massive move. And this day, we were like flat, I think, or up small pre-market. We're all the way down here, like 370 something, and we closed at 396. So unless the number is massively cold or massively hot compared to expectations, I don't think that we're going to be seeing as big of moves going forward, because there becomes this like yin and yang of like trying to balance the market being. I mean, we're seeing this recession trade come in, right? We've seen this recession trade over the course of this month. Well, where's the recession on that jobs number, right? So again, kind of a great question, but a complicated question with a complicated answer, and I hope I kind of got my point across on how I think that's going to be playing out. So.
Cool.
Cool. I read that gross margins for Carvana have always been negative. I think I saw that too.
I don't remember, because you think we're at risk. Like, let's just say, like, the next 2 CPIs come in, like, fucking, sorry for the cursing, very hot. You think we're at risk to, like, for them to, like, start raising way more than we thought?
So will that then? I mean, that's your ultimate worst case scenario is that everything that the Fed has done cannot dampen inflation, and you go into a recession with inflation. That's the ultimate worst case scenario for the market is a recession that can't bring down inflation, which I don't think that's what's going to happen. But if that happens, then that 3,000 bear case might be too bullish from Bank of America to be totally honest, because if we're into a recession, you want the Fed to ease. The Fed can't ease because it's going to increase inflation. You just go into a death spiral there, an economic death spiral. It's just really bad. But I don't think that's going to happen. I do think that the broad view that the Fed has provided on their timeline on inflation working its way down to like 3% over the course of the next year plus or whatever it is, I do think that is going to be what happens. It's just, what does the path look like for us to get there, and what is the toll that it begins to take on the economy? And I don't know that answer yet, but I love the question. I love these types of discussions. All right, cool. Did I get through everything? Sorry, hold on, let me scroll down. I missed stuff. Can you light a screen with a blowtorch? I have no idea what I'm missing in part of this conversation about how computers work. That's how I built my PC, graphic cards, all things I know nothing about. I think the next market-related comment I'm seeing is from Sharon at 456. One theory is that fund managers may dump their worst performing stocks and load up on the ones that have been doing the best towards the end of the year. If that is the case, it would seem that we would do better to buy stocks whose 50 and 200 moving averages slipping higher. Yeah, so talking about just kind of tax loss harvesting and stuff into the end of the year. I thought about that a little bit, and I don't have a strong thought process on it yet. Because it seems like everything's down. So like, you could sell your treasuries for a loss. You could sell your stocks for a loss. Like what is positive? What is positive that you are that you're not tax harvesting out of? Walmart, energy stocks, couple staples. So I'm really not sure how that's going to work here into the end of the year this year. I'll be doing more research and reading more about it, I'm sure, soon. More computer chatter. At the bottom here from Mark. Do you think institutional buying to juice the numbers for year end could help keep up from a real plunge, barring an expected CPI number? By the way, I'm slightly bearish. I mean, I'm kind of slightly bearish myself. Do I think institutional buying to juice the numbers for year-end could help keep up a real plunge, barring an expected CPI number? So I don't know. I really don't know, because you look at Bridgewater, right, that everyone's been chatting about over the course of the last couple of weeks, that like just gave back their year in this market squeeze. I don't know what they've unwound, but I don't necessarily know or believe that funds are incentivized right now for this market to close well into the end of the year. They might even be incentivized for the opposite to occur, depending on the fund that you're looking at. Seemingly Bridgewater is that way, and it seems like I was reading something else. It seems like a lot of funds are having to liquidate their long dollar positions into the sell-off, and that exacerbated some of the recent sell-off in the dollar. So I really am unsure on what they want. I feel like last year coming into the end of the year, I had like strong confidence on how like into the last day of the year would kind of play out, and I don't have that same confidence yet at this point. But I'm sure I'll be reading more and doing more research and coming up with a thesis for it, because it tends to be how I roll. But for the moment, I don't have a strong opinion on it. All right, gang. Looks like I got through it all. So yeah, we'll wrap it up for today. Not a good day for Bulls. Bulls had a real opportunity to give a bounce today. They failed to be able to do it. Tight inside day. We'll pay attention to that high and low for tomorrow for the SPYs and the IWM. Seems like buyers are on strike and sellers just took a break after 2 heavy days of selling. But after a day of rest, they could easily resume again tomorrow. So have a great night, everybody. I'll see you all then.